I'm not going to get to the second verse. All right, big show tonight. Don't want to spend too much time. Somebody said something funny in the comments just now, though. Somebody said that inflation is forcing them to learn how to catch their own food. I thought that was pretty funny.
Wait, I don't get it. Oh, catch. Got it.
Yeah, or something like that. I didn't do it justice. It was funnier than it sounded. All right, what do we got here? Shout out Ravi Come Up, David Wysocki, Tom Salyers, some new folks in the chat tonight, and Jay Luther's here, and Roger Weatherford's here, and Cliff Peebles, and some of the regulars. Patrick Henry, what's happening?
Did you watch the Tinder Swindler?
Not yet. I've been watching the other one, Inventing Anna.
How is that?
Obsessed.
That's Ruth. That's Ruth, right?
No.
From Ozark.
It's a new actress that nobody's ever seen before.
It's not Ruth?
No. I don't think so.
All right.
You think that's Ruth playing that part?
What's it? I thought I saw Ruth.
It's Ruth
from
Langlois.
Ozark?
It is Ruth.
No way. Is
Yeah.
it? Oh, she's incredible.
She's so
She's
good.
even better actress than I thought.
She's so good. She's a chameleon. She fooled you.
She's so good. She is a chameleon. All right. Let's go first of all to our sponsor, new sponsor tonight, but it's something that you guys might be very familiar with. It's Liftoff Invest. So we decided to give tonight's show over to Liftoff. For those of you not aware, Liftoff is an automated asset management platform. We built it on Betterment's software, and basically it allows us to help people who are under our traditional wealth management minimum with everything from goal setting to financial planning to managing their money. And the URL is liftoffinvest.com.
Technology in the front, CFPs in the back.
That's right. Oh, so what separates this from just going directly to Wealthfront, Betterment, whatever? Well, we have actual human certified financial planners standing by to help you if you become a Liftoff Invest customer. So it's a pretty cool mix.
Duncan, throw it up.
Throw it up, kid.
5, 4, 3, 2, 1, 0. Liftoff. Liftoff. 30 minutes after the hour.
What the hell is no, but can you explain what the significance of the moose and the yak is? What is that about?
They're
Duncan,
bulls
was that
and
you?
bears. They're bulls and bears.
Bulls and bears?
Oh, that's why there's a koala?
Yeah.
I honestly don't even think even one of those antlered animals is a bull. No, I seriously think it's like a yak. Can we run that? I know we have a lot to do. Can we run that back one more time?
5, 4, 3, 2, 1, 0. Liftoff. Liftoff. 30 minutes.
All right. Maybe one of those things was a bull. That was special. Okay. Ukraine. As a geopolitics expert, I wanted to get it straight from the source and ask Michael, what are you, is this over now? We done with this?
Can I tell
or
you
is
something?
it?
I got
ahead.
educated this morning. I listened to not one, but 2 episodes of The Daily. So I'm
Same.
What do you need? What do you need?
Well, this seems like it's kind of backing away, but who the hell knows anything, right?
So here's what I learned. Ukraine,
Okay.
second largest population country in Europe, 40 million people almost.
Yeah, it's a big deal.
Massive border with Russia. But what seems weird here, obviously I don't know anything about what's going on, but it seems like there's like some weird shit going on. At least I don't know if this is misinformation. I'm not paying too close attention, but that like somehow we were like saying that there's going to be a war and now there's not going to be, and we look like idiots and a lot of people look like idiots. What's going on?
First of all, throw this oil and natural gas price chart up. Let's keep this vaguely financial. Here I'm reading. And what's this other one? Just straight up crude oil level.
Crude came in big today.
This is
Which is
meaningful.
good.
This is meaningful. Right. Crude is going to trade in the opposite direction of the rhetoric about whether or not there's going to be a war. This is Axios. Oil prices briefly jumped above $96 a barrel on Monday, the highest since 2014, as investors grew skittish about continued access to Russian crude, blah, blah, blah. Natural gas is also an issue. Germany basically has to get its natural gas through a pipeline from Russia through Ukraine. And the Russians made comments today when meeting with the German prime minister about how there has never been an interruption in the flow of natural gas. Like, why are you even talking about this? Don't worry about it. So they get about a fifth of their gas from Russia. So it's obviously an economic story as well. So I wanted to do two things here. I wanted to just get into what Brian Westbury was saying over the weekend. And then I wanted to have you kind of walk the audience through the geopolitical history of like what it really means for stocks, because I think there are a lot of people who really don't understand what stocks generally do during these types of events, if there even is going to be an event. So this is Westbury, real quick.
Wait, Westbury's what? He's the chief strategist?
Westbury's the chief strategist at First Trust. I've had him on the podcast. He's great. By the time you read this, Russian tanks may already be rolling across the Ukrainian border. If not, we think an invasion of eastern Ukraine will probably start soon after the Olympics to avoid embarrassing China. Yeah, you don't want to do that, which is a Russian ally. Not invading at all after a big buildup of troops, arms, and equipment would make it tough for Russia to bluff in the future, like almost like they might have to invade. By contrast, reincorporating more of Ukraine into Russia would seal a place for Vladimir Putin in Russian history. All right. So he's saying an invasion would likely set off a flight to lower risk assets, but we don't think it changes the outlook for corporate profits over time. So any downdraft in equities would be temporary and a buying opportunity. Michael, doesn't that line up with what we were talking to Tony Dwyer about, how profits in the end are the only thing that matters? Are they going up or down? Mm-hmm. All right. So de-escalation seems like the word of the day today. Apparently, some troops are pulling back or whatever. But like, don't use me for your news for this. But that seems to be what Wall Street thinks. But I want you to just kind of walk people through some of this information about the history of stocks and geopolitics.
All right. First thing I'll say is that this, like, obviously all this stuff is important, right? Like, there's lives at stake, and it's like economically important from a humanitarian point of view. It's important. But I can count on one hand the number of conversations I've had with clients about geopolitical events. I understand why the media covers it as much as they do. They have to. It's a news story. But I really don't think that investors... What are you laughing about? Comments?
The koala bear.
Don't even...
The koala bear.
bear.
I can't.
I'm
not laughing about Ukraine, I swear.
Okay. I give investors a lot of credit that they generally understand that these things, even though they're going to be noisy in the short term, do not drive...
I'm turning off my comment.
Come on, pay attention. They do not drive profits, which is what ultimately matters. So we have... Throw up this one chart. This is when Russia invaded Crimea. So stocks actually did okay.
That's the gray area that invasion period.
Yeah, so was it bullish? No, of course not. Stocks happened to go up when that happened.
Oh, I don't know. It seems decisively bullish.
All right, so I grabbed this from Ben. He wrote this in 5 years ago. In 1939, Hitler invaded Poland, as we know. When the market opened on September 5th, the Dow rose almost 10% in a single day. Now, this sounds awful to say, but I can't say this, but wars can be very bullish for profits, right? They can be.
They cause
massive production,
an industrial production stampede.
Actually, you could say that World War II helped bring us out of the Depression. I don't think that's like hyperbole. From the start of World War II in 1939 until it ended in late 1945, the Dow was up 50%, more than 7% a year. The Cuban Missile Crisis, which was one of the scariest moments, like on the brink of like an all-out nuclear war. In the 2-week period, the Dow didn't really do much. That shocked the hell out of me, lost 1%. Yeah. Dow gained 10% that year. And this is the one that really is like, holy shit. So when Kennedy was assassinated, they closed the market, right? As soon as the news hit, they closed the market. The next day, when it opened, the Dow was up more than 4.5%. So
I still don't understand that.
I don't understand. So it's not that these are bullish. Nobody's saying that because 9/11 was hard. Was really bad for stocks. So it's sort of a mixed bag. The point is, and I really don't think anybody does this, but it's worth mentioning. You cannot run for cover when there's geopolitical turmoil.
So I would just like as a coda to this. Sometimes there will be a geopolitical event that doesn't result in a stock market rally. We're just giving you examples of the ones where it really went the other way. 9/11 had a huge impact. They literally couldn't open the stock market physically for a week. Now, it was not a million years to get back to break even after 9/11. It actually happened sooner than you would have guessed that it would, but it definitely hurt. So it's not that, ooh, look, a geopolitical crisis, get bullish. It's just markets rarely do what you think they're going to do. Is that the right way to sum that up, would you say?
Yes.
Right.
I remember being on the subway one time where we launched missiles into the Middle East on a Sunday night. I can't remember what year it was. And I checked the futures.
Futures like
They were
nosedive?
No, they were up.
Oh, they went up?
Yeah.
Okay. Yeah, it's not intuitive. And the stock market is not geopolitics. It's affected by it, but it's not a mirror image of the headlines you see in the newspaper about the latest war that's about to start.
So if this causes, if there's a war, God forbid, and it causes some sort of commodity crunch and natural gas spikes and crude, like that will ultimately impact earnings and the ability for consumers to spend and stuff. But yeah, we don't know that obviously. All right, let's move on.
Can I do a real quick conspiracy theory? So there was all this talk about how after China banned crypto that Russia would do the same. And actually Russia, not only did they not ban crypto, they actually have more fully fleshed out regulations now than we do for how they want crypto to be handled. They basically said transactions over USD $8,000 are reportable and that licenses are required for exchanges and brokerages, which will be overseen by their financial regulators. And my quick conspiracy take on that is Putin's probably thinking about the idea of sanctions and then saying, wouldn't it be really cool if we had this way that we had our own banking system that's completely away from SWIFT codes and foreign oversight, and we could just move money however we want.
I thought you were going to say Gensler's a Russian mole.
No. I think he's thinking about, wait a minute, maybe this could be useful to us after all. So anyway, just thought I'd throw that out there.
I went in on the SEC today on animal spirits. Did you read what Hester Pierce wrote about BlockFi?
No.
Right,
She's a proponent of crypto.
That was my Independence Day speech moment. I went for it. All right. Anyway.
Okay.
So tune in tomorrow to Animal Spirits. Yeah, thank you. All right, let's talk about inflation. What are you doing? Get that out of your mouth. Let's talk about inflation.
Did you ever do this?
Not a big gulp guy. Oh,
no, it's not a.
What is it?
So it's a soda, like it's Diet Coke, and then I top it off with cherry Slurpee, and I put the Slurpee top on it. Did you ever do that?
Fat free?
Yeah, but a little bit too much sugar. All right, go ahead.
Okay. You know what the best inflation hedge is? Selling Super Bowl commercials. Look at this chart from Bespoke. Whew.
Wow. Wait, so what? So hold on. That's a percentage increase? That's a percentage increase in the cost for a 30-second ad?
Percent increase, yeah.
So how much is it? I read that there were some of the commercials was $7 million last night. Is that the number now?
I don't know what it is.
I don't think that's what every spot was worth, but there were certain spots that got up to $7 million. That's out of control, right? What was your favorite commercial? I'm guessing LD. It was? Okay. I kind of liked Coinbase's better.
He definitely got paid in dollars.
Yeah, I would assume. I liked Coinbase's better. I just looked at the reaction of the people I was with. There were 30 people holding their phones up to the screen. Yeah. It was as genius as it gets.
It was really smart. All right. The average U.S. household is spending an additional $275 a month. That's not an insignificant amount of money.
That's a lot of money.
And the problem is, and one of the reasons for the constant anger that we see is because the middle class, the majority of the country, is getting hit the hardest.
Yep.
So they broke this down by like how much prices are going up for each cohort. So middle class households, prices were up for them 6.7%, 0.5 percentage points higher than the lowest and highest income brackets. And throw up this chart. This is showing real income growth per adult in 2021. The total tracks inflation. That's cool. All right. On a net basis, people are okay, right? Up 7.6%. The problem is that the top 10%, look at the top, the rich are getting richer. And finally, the bottom are catching a break. That's wonderful. The bottom 50% up 11%. But look at the middle 40%.
Yeah, they get the least benefit. They get the least benefit. Their income grew, it looks like 5%. And if you're in the top 10%, your income grew by 9%, which is nothing to say about your asset values probably grew 30%. So it's very tough to be in the middle in our current economy, and I think it's been that way for a while, but inflation magnifies that.
I listened to Derek Thompson today talking about what's going on with the trucker protests, which ironically is not even mostly truckers. And it's a lot of the same thing. It's not that they're just protesting vaccines. They're just protesting because they're getting a raw deal. And when I say they, I mean the middle class. Like that's what a lot of that is about. Yeah.
Let's do this. Percentage of Americans who think their financial situations will worsen next 12 months.
This chart sucks.
Yeah.
This is a tough chart.
I'm going to get into I have some more on from this survey for later, but I think that an understated aspect of this is how important the region of the country you live in is to how you feel about it. Nobody likes it. Let's just stipulate that. But how bad it is for you, in large part, depends on where you are and how much of a shock it is. So let's throw
and
this
whether
one
are
up.
you an owner or a renter?
100%. Cities with the highest rent growth in 2021. So it's cities that had net inbound migration, obviously.
This is totally fucked.
Go ahead.
Look at this rent growth. So, a lot of people say inflation is so understated, only 7% year over year. Give me a break. Yeah, guess what? That's the national average for a basket of goods. And most people don't live the average life. Most people are dependent on their own situation. And if you're in one of these areas, inflation is not 7%. If 30% of your money is going to pay rent, this kills you.
What is the story with this Sarasota, Florida bullshit? 31% rent growth? Why? Is it? Did you run out of places to move to? Have you ever been there?
No.
Bro, I went there with Chris.
I know.
We looked around and it's
2014.
Listen, it's beautiful. It's nicer than here most of the time during the course of the year.
That's not saying much.
But it is mad elderly. Like I don't know how would they pay unless young people are moving in there and taking over. But we looked around and we said, man, this is where old people's parents live. You know what I'm saying? Like, all right. I don't know what the Bremerton, Washington thing is about, but anyway, let's from 2015 to 2019, the average annual rent growth across major markets was only 3.5%, but then in 2021 it was 13%. That is what is that 4x? And then some of these cities in Florida, it's 30% or more. What else was I going to do here? Oh, so now you have higher mortgage rates, and theoretically, that should cool the housing market off by making it slightly more expensive to buy a giant house and probably shrink the universe of potential buyers. But
no. It's not going to shrink the universe of buyers. It's going to shrink what they could afford to pay.
Potentially, right. But the reason why that might be offset, according to Matt Phillips, shout out to Matt Phillips, friend of the show, at Axios, there just still aren't enough homes. There were only 790,000 existing single-family homes for sale in December, which is the lowest level on record. So you have crazy low inventory, but you really can't knock demand down to the point where that really helps you with higher mortgage rates. It's just not going to get to that point. We're going to have shortages for a while.
Listen to this. At the end of last year, there were 410,000 fewer homes on the market that were considered affordable for people earning between $75,000 and $100,000. So what they did was they calculated 30-year mortgage, assuming you spend 30% of your income on housing, and here's what they came up with. So households earning between $75,000 and $100,000 could afford to buy 51% of the active housing inventory. That's down from 58% in December 2019 before the pandemic.
Huh. That's amazing. And I don't know what's going to fix it.
It's not good.
No, because there's no home builder that wants to run out right now and start throwing houses up at prevailing labor costs and materials costs. So I don't know that this gets fixed for a long time, which gives me the sense that even with higher mortgage rates, the housing market's going to remain strong.
Yeah,
and
I would just
certainly
say that higher mortgage rates will impact how much people can afford to pay, and sellers will respond to lower offers.
You know why I don't think that even matters? Because the sellers will sell lower, and then they have to move somewhere. They don't drop dead after selling. So they'll get the benefit of being able to buy their next house or rent their next apartment at a slightly lower price too.
But I agree with you.
Most
I
of us
generally
could
agree
live
with
with
you.
that.
I think house prices are going to come in a little bit, but not much. All right, let's move on. Are we good?
Consumer price index by city. Let's do this real quick. This was
This is a good
wild.
one.
Yeah. So look at Atlanta. ATL. ATL was one of those pandemic cities where it was like, do whatever you want, go to the strip club. Like the hip hop strip clubs were packed. People were like out in the streets in Lamborghinis shooting at each other. It was like a great
Stop.
pandemic. No, it was like a great place to go if you wanted to pretend there was no pandemic. Phoenix up 9%. Here's the point put that chart back up really quickly. Here's the point that they're making. An important factor driving the regional divergences, according to economists, was pandemic-fueled population shifts from larger cities to suburbs or smaller metro areas, both by retiring boomers and remote workers. Right. So people moved to Atlanta and Houston. They gained 5 new residents per 1,000 since March 2020. Dallas gained 12 per 1,000, mostly from LA.
What do you think the inflation is in like Montana, where a lot of people went to, and places like Idaho? I mean, you kidding me?
It's probably crazy because people with .com money are buying ranches from like 5th generation ranchers who they've never even heard the word million in their life. And then it's like, I'll give you 8 million because I don't give a shit for your ranch. And you probably saw that all over the place. All right, that's all I wanted to do. Let's go to sentiment implodes. You and me are not big we're not big sentiment people in terms of stock market bulls, bears.
I love it.
Yeah, but we're not like, oh, this is terribly meaningful. What I wanted to ask you about this, consumer sentiment, this is University of Michigan, absolutely fell off a cliff in February. And what's really fascinating is that most of that drop in sentiment was concentrated to the high end of the income scale. Sentiment continued its downward descent, reaching its worst level in a decade, falling 8.2% from last month, 19.7% from last February. The recent declines have been driven by weakening personal financial prospects due to rising inflation and obviously the stock market. So this is you Mish. Importantly, the entire February decline was among households with incomes of $100,000 or more. So they had the biggest fall off in their sentiment. What else could that be besides the NASDAQ crashing? Inflation and bad stocks. Yeah. Because these are
inflation. People hate inflation.
Are you surprised? All right. Are you surprised by how fast this has impacted the psyche of the consumer? The $100,000 plus income household, their sentiment index fell by 27.5% from this time.
Not really, because those in often cases those are the people looking for homes, can't afford it.
Maybe hiring people.
Maybe have kids. Maybe hiring people. Chipotle said that they could afford that they could still do 6 more rate hikes on burrito bowls next year.
6 more?
When we go downstairs,
that's like the burrito fed.
I'm drawing my line. 14. I'm not paying $14 for a chicken bowl. Get out of here.
Is there a dot plot for Chipotle burrito hikes?
I'm gonna bring my own sliced turkey. I'm not paying $14 for a burrito bowl. It's outrageous.
Like
anyway, the point, dude, inflation
like a bowl
sucks.
of garbage anyway.
Even people that
offense.
are
No offense.
talking shit about Chipotle. You like Chipotle?
I am. Yeah,
great product. Even
I'm
people
lazy, so I eat it.
even people that are keeping up with inflation, right? Let's say your wages are keeping up with inflation. You see inflation every day or multiple times a week. You get a one-time wage increase, right? You're not getting a wage increase every week. So you fill up your car and you see it keep going up and up. Bacon, burgers, everything is getting more expensive. It takes like a psychological toll.
I think the middle class was okay with some inflation so long as their home price was rising by 18% year over year and their stock portfolio doubled. But once that stops, all of a sudden the housing market cools off for the winter, as it always does, and the stock market gets demolished. All of a sudden now inflation's not so cool. And I think that had a big impact on sentiment too.
How many months are we above 5%? Let's see.
I think
1, 2, 3, 4, 5, 6, 7. It's 8 straight months since May of above 5% year-over-year prints. That's a lot. It's 8 months.
We know that's going to start to fall off, but
while
you wait.
New York Fed survey of consumer expectations just rolled over pretty hard.
Yeah.
So that's good.
It should be. All right, let's keep moving. What do you got? You're up.
This is a hell of a lead from PitchBook. They did their U.S. VC Valuations annual report. Here we go. The early stage continues to resemble the late stage of years past. Let's throw up a few charts. We've got last year. So these are showing seed deals. I mean, look at this. Look at this. The median seed size grew by nearly 50%. Found the inflation.
Size of the overall deal?
While the valuation, just the size of the deal. While the valuation increased by 34%.
Okay, so the median seed deal is now a $3 million raise. Is that what we're saying?
Median, yep.
Up from a $500,000 raise 10 years ago. That's what it looks like.
The next chart is pretty epic. It's just there's so much money, new money coming in. So look at blue line. It's showing non-traditional investors. So if you think the early stage is nuts, late stage is absolutely berserk. Like these growth rounds, the series D, E, F, whatever, forget about it. They're trading at public company sizes.
Yeah, and this is just a function of the culture is now all about entrepreneurship and funding things, and regular people are more up to speed on the jargon involved with Series A, Series B, etc. There's a higher comfort level on the part of institutions to be dipping into areas that they didn't used to, like venture.
There's also one important detail. So not everybody's a psychotic idiot who's just paying outrageous prices and we're in a giant bubble. One of the reasons why this is happening is companies have demonstrated the ability to scale up so much quicker than they ever have in the past. Like businesses are going from 0 to 100. Now, listen, there's obviously there's some deals that are just make no sense at all, but companies have demonstrated the ability to really do this quicker than they ever have in the past. So it's no wonder that the speed and the size is reflecting that.
Yeah, I also think it's easier to take money from people that you've never met and launch a fund online. And there are platforms now that let people get in that traditionally would never be sitting in a roadshow
100%.
or get pitched.
100%.
And so there's a confluence of factors leading to this. All right, are we moving?
Yep, moving.
All right. So speaking of not everyone's an idiot, I had this thought, and this is probably means a market top, but like if you look at the M&A activity, you would conclude that like either every one of these companies in every sector is totally idiotic, or corporate America is pretty okay with the valuations for other companies that they want to merge with or buy.
And or interest rates are very low.
And or balance sheets are absurdly strong. So,
right. So you're borrowing money to buy ostensibly good companies that are creative and blah 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 blah. So it makes sense. Yeah, I don't think that CFOs and all these boards are idiots.
Cisco was reportedly in talks with Splunk, which I still can't explain what they do, for a deal worth over $20 billion. That sounds like a future write-off, but so what? Microsoft bought Activision Blizzard in January for $75 billion.
You know who bought? You know who bought Activision shortly before that? Did you hear about this?
Berkshire. Thank God.
Pretty good.
I was saying, thank God Bill Gates had already stepped down off the board because that wouldn't look great.
Yes.
Off the board of Microsoft. Anyway, that'll be their biggest deal ever. Oracle in December announced a deal to buy Cerner, which is medical records, for more than $28 billion. That would be Oracle's biggest deal ever. So there were $2.6 trillion of mergers announced in the U.S. alone in 2021.
I assume that's a record?
Dude, that's up 76% from 2020. Not only is it a record, it almost doubled year over year.
Do we have 2019 numbers?
No, but 2019 could not have even been close.
Yeah.
So look, I would just say, do we think every one of these CFOs working on these deals and every investment banker is just completely out of their mind? Or is there some valuation support in the form of all this M&A? I feel like the truth is probably closer to the latter than the former. What do you think?
Yeah, I cannot agree more.
Yeah. All right, let's keep going.
All right, I've got conflicted feelings about this. So let's talk about gambling. I love gambling. I've been gambling for a long time. Now I can do it legally, which is wonderful. And so let's get into the numbers, and then I'll give some editorial. All right, New Jersey led the way in sports betting. So Barron did a whole piece over the weekend. $10.9 billion was wagered in 2021. A lot of money. Gambling casinos. So the advertising is nuts.
New Jersey is the biggest sports betting state?
It's about to be New York. I think New York was $7 billion in the first couple of months.
New York just started. Okay, got it. Okay.
All right.
Gambling companies spent $725 million on TV ads. No shit. That's all I ever see. That's three times as much as cereal ads.
The only advertiser, I can't wait. I can't wait to see Twitter's numbers for the first quarter, because the only thing I see in my stream is Caesars and DraftKings and et cetera. And so I feel conflicted in the sense that, yes, obviously there are going to be people that are hurt by this, right? That are I don't want to, it's not their fault, but that get in over their skis and use this the wrong way. And I don't want to say, so what, like people, there's plenty of responsible drinkers. But the train has left the station, right? There's no going back. So I think that like kids will adjust, people will adjust. And for the most part, I don't want to say it's like a net positive, because I don't think it is. I just think it's inevitable. It's here, and we're not like, what are we going to do about it?
No, you're not going to do anything about it. It's a net negative. No offense. It's probably better than the mafia and not collecting taxes on it, because it was going to happen regardless. But I think what it's doing to the kids is fucked up. And your kids are too young for you to understand this. But watching my kid, who's 12, and all his friends who are 12 turning 13, begging their parents to set up the app on their phone so they could start doing prop bets. I honestly don't even think they care what team wins the game anymore. I think between fantasy football and this, their minds are just being warped. And what we're basically going to do is turn the whole country to Atlantic City, which, one of the top 10 shitholes that didn't have to be that way.
Fine, but let me push back. I get it. But don't you think that kids are going to adjust? And we could say, like, I don't think that, maybe this is a terrible, I'm not going to say this analogy. Don't you think kids are going to...
No, I don't think they'll adjust. I think they'll adjust in a negative way. Here's Ravi come up in the stream. I agree with this. Got to get rid of gambling commercials, just like cigarette ads. Yeah, I think it's... Listen, I'm not looking to, like, regulate everybody and tell people how to live their lives. But when you watch an NBA game with your son, and 1 out of every 2 commercials is JB Smoove or the putts from Breaking Bad talking about gambling, what the fuck do you think the impact is going to be on these kids? This is all they want to do now. And I don't think it's a net positive. I think the $58 million in taxes that New York collected in its first month, keep it, because it's not going to offset what we're doing at this point for people's brains. I think it's. By the way, who's going to lose? I'm not going to lose. I don't gamble. I invest. I'm not going to lose. The people who are going to lose are the people who win their first bet, and it makes them want to bet even more, and they get hooked, and they will have pretty much nothing. So I think there should be legal gambling. I think sports books should be legal. I like the apps. I think they're better than what we had before. I just wish the advertising would calm down, but it's
Well,
not going to.
No, I think it will actually. So what we're seeing is because it just became legal in New York, 2 months ago?
Yeah.
Like the tidal wave of spending on the advertisements, I think is going to slow down.
True. Here's this dude, Dan McIntyre, on the stream. Pendulum to gambling has gone from ban to bubble. Needs a revert to mean. Yes. Why does it have to go from 0 to 100? Can we ease into this?
I don't think everybody's going to turn into a gambling psychopath. I just don't. I think that's
I don't think so either. But a lot of people, and especially young people, I think this is not going to be great. So I don't want to ban it. I don't want to stop it.
But can't we say the same thing about a lot of things that are bad?
Yes.
Gambling in the stock market, alcohol.
Totally agree. Listen,
So I'm not saying that it's good. I know that's tough with the kids. I get it.
I'm not saying that anyone legally should do anything, I guess. Maybe banning commercials is a little much, but I just feel can we calm down? Is there no other source of revenue for ESPN? Is there no other way to make money?
That's the only thing that matters.
I get it, but can we go back to beer and pickup trucks, please? Because it's a lot.
Yeah.
It's a lot. The good news is a lot of these folks will start running out of money because they're going to spend $40 to acquire a customer that pays them $8 before going broke. So
I
that
can't wait to see
obviously can't be infinite.
the burn on these companies. They have to be bleeding money. I mean, obviously.
Yeah, I would be betting on the companies that have their own in-house content that's more sustainable than buying TV commercials.
Is there room for DraftKings, Penn, FanDuel, Caesars, a million of these places?
No. There'll be acquisitions. BetMGM is big. It's not possible. There'll be winners and losers. I don't know how long it takes for that. Look, when you have an equity, a stock market bubble fueling all the money that's being spent on these commercials, it could take years before the winners separate themselves from the losers. And in the meantime, everybody spends too much, and nobody has margins until that shakeout happens. So I don't know how long that's going to take.
This is a great example of what could be a gigantic industry with no winners.
Yeah. I mean, that's Uber and Lyft lost money, both of them, for, I don't know, going on 10 years now?
Uber's still losing money.
Well, they just became earnings positive, but it only took 12 years. So Uber and Lyft have been around for more than a decade, and they just started making money. There were other players in that space that have been long gone. Could you imagine there were 5 of them? And the sheer, and they were actually spending money on TV, which none of them do. It would be disastrous. So it's great, by the way, it's great for sports podcasts. It's great for TV.
You know what I did last
networks.
night? You know what I did last night? When the Thunder were plus 920 for the money line, I hit it. So I get some joy out of the Knicks losing to the Thunder.
Did they blow a 25-point lead? What was it?
No. They blew a 25-point lead to the Blazers.
This whole trip to the West Coast, every one of these blown leads was preventable.
Yeah,
if they just had one guy that could shoot.
We lost to the Thunder at home, so that's cool.
All right, nobody wants to hear this shit. Okay, Duncan, come here. Can we talk about the new item in the compound store?
Yeah, let's
What
do it.
new item?
Ooh, you don't even know about this. New hot shit. Put it up.
Well, first of all, here it is in the flesh. But
So Duncan said we got to do a hat. He's a big hat guy. You're a big hat guy.
Not a flat bill. I don't do flat bills.
No, you can bend it, handsome. You can bend it.
No,
It
you
just
can't bend
starts-
those. You can't
it
bend
sta-
those.
it starts
I know
off that
from
way.
brims.
remember,
you can't bend those.
you can get one of those things that actually bends the bill for you.
No. Those are not for me. I still can't get my compound sweatshirt. Inflation. I can't get one.
Yeah, we cut those off.
They're out of stock.
They're out of stock. All right. Anyway, the official compound snapback is
We
now,
should gamble. We should gamble on when the sweaters are going to be back.
It's now available in stores. Is that one mine? That's sitting in there. Can I have that one?
It can be, yeah.
All right, I'm gonna take that one. Michael clearly doesn't want it. All right, what's the first viewer topic?
Okay,
Oh wait, I should say idon'tshop.com.
Oh yeah,
is
idon'tshop.com.
where all the merchandise lives. All right, let's go.
Oh yeah. By the way, how was Charlotte and your trip down south?
Beautiful. I love the South. I really do. I love grits. I love people who smile. I really love the South. I got to tell you, I had a great time in Savannah. Had a great time in Charlotte, but I very much fell in love with Charleston, and I'm gonna go
cool.
back to Charleston for sure. That was my favorite. So big fan of the Carolinas and Georgia. All right, go ahead.
Okay, so first up, we have a question from Brad in Florida who writes, could a massive crash in crypto cause a correction in the stock market? They're basically
No.
asking if it's big enough to have a material impact.
I don't think so. I think those are.
We did this once, right?
Did we?
We did a similar one a long time ago.
I think those are mostly different pools of money. Like I don't think that a crash in crypto could cause somebody to get margin called and then sell all their stocks. I just don't think it's big enough.
I'm with you. I think it could crash a couple of financial institutions, but I don't think it could crash the overall stock market. So I think there's a lot of leverage in the system we don't know about that would only really come out if Bitcoin gets killed and stays down for a while. That just hasn't happened recently. These Bitcoin corrections are ending really, really quickly.
Anecdotally, it seems like usually when the market's down, I check like Coinbase and it's down. Has that been? Is that
When
does the data
stocks are
back that up?
when stocks are down, Bitcoin's down. Is that what you're saying?
Yeah, it seems like it.
They become it's a risk asset.
People get mad at that, so be careful.
No, but
it's true, but people get mad about that.
Recently, yeah, when the market goes down a lot, so does Bitcoin.
The Bitcoin rally from 38,000 back up to 44,000 recently is driven by $25 million worth of Super Bowl commercials. Probably pushed a couple of billion back into the asset class. No. You don't think so?
No.
You don't think Coinbase is going to report tons of new accounts opened as a result of their Super Bowl commercial?
Yeah, they were giving away, if you did the QR code, it was $15 to sign up, right?
Yeah, no shit. I would say that there's some of this rally is from the Super Bowl.
You know what
effect.
it is? It's risk coming into the market.
Just period.
That's it.
Okay. All right. I would take that. What's next?
Stocks up, crypto up.
Okay,
we go.
up next, we have kind of a fun one. So Dennis writes, what do you think is the best stock or investment gift for a newborn today? So looking out real long term, I guess.
We once did a thing like 3 years ago on this channel, like what's the one stock that you could hold for the rest of your life?
Yeah.
And I picked Alphabet, and I think I would still give that answer today. What do you think?
It's funny you say that because and I didn't include that, but they said it used to be, Josh said Google in the past. So
This is a really good question. I guess the one thing that I would want to lean on the most above anything else is brand. So maybe I would go with Disney. I think it's like impenetrable.
It's not a bad answer. I would probably be in my top 5. Just because I feel like Disney has already proven that every decade there's a new medium that comes along. They have already proven that they have what it takes to make it in that medium. Think about the progression.
Think about how dark the world would have to get for Disney to go out of fashion. The happiest place on earth.
Yeah. But like just think about like it starts with silent films and then people start making talkies. Okay, we could do that. And then it's live action. Okay, we could do that. Then it's computer generation. We'll do that too. Now it's streaming. Look at us. We have the second biggest streamer. So I feel like they eventually always figure it out. And they have plenty of time to because of how important that content library is. So whatever the format is, if it's DVD, whatever, like they get there and they somehow make it work. So I think that's not a bad pick. I would pick Google/Alphabet. Just because I don't think there will ever be a situation where people just stop wanting to know things. And Google is how you get knowledge now. And they really don't have a competitor there. And then, God forbid, one of these other bets pays off. Quantum computing or Waymo or any of the other shit they're doing. That would just be the icing on the cake. So I think Alphabet's a forever stock for me, too. All right. What else do we want to do, Duncan, before we wrap up? New Animal Spirits tomorrow we wanted to promote.
Yeah, I am the Compound and Friends.
Compound and Friends at the end of the week. Oh, CNBC fans, tomorrow at 3:45, my regular Wednesday appearance on Closing Bell is Wilfred Frost's last show at CNBC.
Where's he going?
He's going Sky News for the English broadcaster.
Oh, that's a shame. I mean, good for him. He's great.
Good for him. Wilfred's one of the best to ever do it. I think he's covered finance very well, in his time on CNBC. I've always had a lot of fun being on the show with him. So we're going to say goodbye to him tomorrow, 3:45 to 4:15. I'll be on the air. So check us out on CNBC. All right. Thanks so much for watching. Make sure you like and subscribe. We're almost through 100,000 subs. We appreciate everybody who came out for the live. Thank you so much. And we will see you later.